Joining us in a CNBC exclusive is Twilio CEO Jeff Lawson. Jeff, welcome back. Always good to talk to you.
Thank you for having me back.
A couple examples this week of companies where, at least in the current quarter, the guidance was a little split between revenue and EPS. Can you talk about the dynamics there?
Absolutely. First of all, we've started off the last 12 months and told investors, look, we are, for the last 15 years of the company, really focused on growth. And now we're focused on more efficient growth because that's what the market requires. And so we took a number of substantive actions and as a result have started showing some pretty impressive growth in our non-GAAP operating margin and also this quarter on our free cash flow generation. And so we're very much focused on that efficiency and showing that our scale business that we have, a $4 billion revenue business, is also able to generate a good amount of profit and a good amount of free cash flow. And I think we've proven that that's possible. As we think about the macro economy, there's certain factors that, are headwinds are the ones that are tailwinds, and those things will end up netting out where they are. But this management team is very much focused on the applicability of our products to pretty much every company out there and doing this at scale and now at scale with profit as well.
Would you argue that there are more turns to be made in efficiency or operating expense, or are you now waiting for prior moves on that front to bear fruit?
Well, what's great about our usage-based model is that usage can pick up very quickly. Now, it's been a headwind for the last, a headwind for the last, 12 months as the economy cooled down a bit. But as the economy heats up again, we see our ability to add revenue, gross profit dollars with very little investment going in. And that means we can drop a lot of profit down to the bottom line. And so I think the go forward for us is driven by growth along a number of factors that then can be very efficient growth that turns into more profit.
At this point, Jeff, if you look at projections for sales growth for you guys next year, it's in the 10% range. Is that something that we should think about as the long-term run rate, or how are the underlying businesses growing? How does that net out for revenue for the company?
Yeah, we gave a medium-term set of targets to investors last year, and medium-term is 2025 to 2027. And in that framework, we said 15 to 25% annual growth, and we believe that those targets are achievable. That is what we're focused on. Although there is a little bit of short-term headwinds in terms of macro, but also as we've reconfigured the company for more profitability and into two business units, we do see a little bit of a period of time as we adjust to that, but our medium-term guidance stands.
Jeff, appreciate it. Obviously a crowded earnings week, but it's good to touch base with you. Look forward to next time.